It's going to be another panel discussion on fintech and banking, bridging the divide. And this is a very important topic these days, right? So for that, I'd like to invite Mr. Aman Dhall, founder of Comms Credible, a global communications consultancy shaping the insurtech industry in India. Mr. Ahmed Abdelazim Alpajy, a strategic advisor for Tamweel Alola, a dynamic finance and strategy leader with a proven track record in non-bank financial institutions. Mr. Danny Makin, a visionary executive driving total processing growth in the UAE and MEA region. He's the managing director, MEA at Total Processing. Mr. Sam Ahmed is the CEO and co-founder of SmartPay, first all-in-one payment experience and interest-free buy now, pay later solution built to solve Japanese consumer payment experiences and issues. Sam is a distinguished digital economy leader and Harvard Business School alumni. Mr. Pavel Fedorov, I hope I'm taking the name correctly. Mr. Pavel Fedorov is the co-founder of Salmon, a seasoned executive with expertise in finance and technology both, contributing to the success of Salmon. So ladies and gentlemen, put your hands together for our panelists here. Esteemed names from the industry, and they will take on the next panel discussion, which is fintech and banking, bridging the divide. I hope you can truly and really bridge the divide.
Good morning, everyone. Thank you, FiNext organizers, for inviting me to moderate this very interesting panel. I think, first of all, congratulations for bringing together people from different countries. So it's a very diversified panel. And I was doing my homework and I saw, everyone is coming from a different country, which makes it, very interesting for me to hear their views. Obviously, I'm witnessing, I've been witness to the fintech, the BFSI disruption that has taken place over the last 2 decades in India. First as a journalist and then on the communications side and then as an entrepreneur. So I think I'm going to talk more about here today this partnership, how this partnership has evolved. And I'm going to ask these people about their insights and perspectives on, do they see this partnership as a as a competition, as an emerging competition, or do they see this partnership becoming stronger in the future? So I think, I'm going to start with Ahmed. What are his insights into the fact that, how this partnership evolved over the last 2 decades from his experience, and how does he see this partnership moving forward, evolving?
Well, thank you, Aman. I see actually fintech was always an integral part of banking system. It was originally introduced as a back-end system technology for financial institutions and traditional banks. And if we look at the first solution of ATMs and credit cards, introducing of credit cards in 1950s or 1960s, so 60 or 70 years ago, and fintech was originally introduced. So today, fintech has been or has changed significantly with the emerging of new technologies. Fintech today is not only including retail banking, but it also includes investment management, retail banking, and fundraising activities. So when we look at the differences between fintech and traditional banks, there's a lot of differences, and these differences create value because each party has different capabilities. And fintech, they need to access the capabilities of traditional banks, and traditional banks, on the same way, they need to access the capabilities of fintech. So fintechs, they need to access customer base, the expertise and experience that traditional banks they have, the knowledge about credit assessment, investment management, risk management practices. And on the other side, traditional banks, they are in need to access the innovative technologies that are not easily transferable or replicated. So these differences create value, and there is a room for collaboration, definitely, to achieve common objectives and common goals. So over the past decades, Fintech and traditional banks maybe can be seen as competitors, but from a wider angle, that collaboration between two players can create value to improve customer banking experience and introduce more innovative financial solution services, and to gain or deliver access or enable access for saving, investment solutions for more people. So I think from my side, I think there is a lot of room of collaboration rather than competition between traditional banks and fintech.
Interesting. I'm going to share my experience. I've worked in the fintech space, and I remember initial days when fintechs came to the party. Traditional players were trying to even kill them. They felt that they have created a distribution channel by a lot of sheer putting a lot of investment, and now these people are trying to come and disrupt. And from that time to today's time, where the same players are today very, very dependent on them for a chunk of their revenues. At the same time, there is always this conversation going on about setting up their own online distribution platforms, or taking things in-house. So there is always a tussle going on. I want to ask Pavel next. How has been his experience, and how does he sees this relationship going, in his own region?
No, Aman, thank you so much. Well, I mean, in many ways, the company that we have and the company that we're building, it has in its name the reference to the legacy banking system. So we're called Salmon, right? The reason why we're called Salmon is we go against the flow of the legacy banking system, right? And we go challenging some of the conventions that people have about the quality of customer service, the centricity of client, really, in this whole part of things. So, I mean, what we're trying to achieve, we're trying to rebuild a financial institution, but just using a very different sort of tech stack, using a very different perspective on the value of data. The relationship, in many ways, will be dictated by the regulators. So we had the luxury when we were starting the business a year ago to actually choose and pick the geography in which the regulator was most embracing, because it's ultimately regulatory driven. So at the end of the day, it's really the embrace by the regulator of the digital transformation agenda, of the fintech story that will drive and define this relationship between fintechs and the regular banks. So when we're actually thinking about the right markets to enter, we've chosen Southeast Asia, because this is where you have, on one hand, 500 million plus of what Noel, I think in his previous presentation, referred to underbanked and underserved people. I mean, that's a tremendous market opportunity on one hand. On the other hand, those are the regulators that are fully embracing of the digital transformation agenda, right? So we've chosen the Philippines as our first starting point. And when I talk about they're building the financial institution using the technology that we as a fintech can bring to the equation, I'm talking about building a licensed financial institution, right? So for me, it's not so much sort of the competition. It's really redefining the customer experience. As you know, I mean, in the States, I think we use the metric of NPS as what I mean, to us, this is really how much customers love you, right? So in the States, I think the average for the traditional banks is something like 23, right, for the NPS score. For fintechs in the United States, it's 83. So I mean, those are incomparable metrics, right, of the quality of a customer experience that the fintechs bring to the equation. And we believe that, yes, I mean, there is a very compelling reason why fintechs are much better liked by the customers, right? I mean, it relates to the quality of tech, relates to quality of service, relates to quality of product, relates to the quality of the mobile apps. Just to give you a data point, in the Philippines, the average ranking, mobile app ranking of the traditional banks is something like 1.5 for the big banks. I mean, out of 5. Think of this. Think of the quality of the experience that you get if you're constantly just pressing this 1 star in an app because of all of frustrations. I mean, biggest companies, I mean, quite often they have their apps down for a week. So how about this quality of mobile service, et cetera, et cetera. So there are so many gaps that we see. We believe that the fintechs could fill with the experience that they bring to the table. And as such, I think that as long as the regulator is open, and we love what we're seeing in case of the Banco Central in Filipinas, because the Central Bank of the Philippines is extremely thoughtful and consistent in driving forward the digital transformation agenda. It's open to granting licenses to the fintechs, which is, again, a very, very important measure of their readiness to embrace what we have to offer. We bought the bank ourselves, so we're now going through the review process with the Central Bank to get approved as a licensed bank. We launched 2 credit products. We're going to launch more at the end of this year. And yes, we will be building a new financial institution, which will be a level up. I mean, like order of magnitude difference for the ordinary customers. And I think for next, 2-3 years, fine, we will not be noticed by the big institutions, but at the end of the day, we'll be rebuilding their experience from ground zero.
Great insights. I'm going to next go to Sam. And I want to ask this question, if you have to kind of describe this partnership, is it a boyfriend-girlfriend relationship right now? Is it, moving towards a marriage? Where is it right now?
Yeah, my company is the first company to deliver open API banking in Japan. So I've signed 78 banks in Japan. We have direct access through APIs to every bank in Japan. I'm the only company to have that license in Japan. So it is a marriage, to put it quite plainly. So our license means that we can offer financial solutions banks can't offer. So we're in Fintech, right? There's 2 words. One is fin, which is you've got to make money, and tech, it's digital. Now, why do the banks not do what we do? One, tech, because their legacy systems mean they cannot do what nimble companies like us can do. And build certain tech from the ground up. They've got a very heavy legacy. The second thing is I think a lot of banks ignored what we were doing because they didn't think it was going to be as good as wealth management, mortgages, insurance. So they left a lot of pieces of the puzzle on the table. However, those pieces became very profitable and they took customer data. So I think then banks got more interested, and I think that's why you're going to see more marriages than just dating.
Interesting. I want to ask, how much time did it take for this dating to kind of convert into marriage in Japan?
Yeah, good question. So first of all, to sign a bank in Japan usually takes 1 year per bank. There's 78, so I'd be 78 plus by the time I signed it. And then they say it's 1 year to integrate. So you're looking at over 150 years. We did it in 5 months. We did it. We signed the contracts and integrated in 5 months. Our key investor, which is my wife, SMBC Bank, to put your analogy, thought it would take us 3 years. It took us 5 months. But I tell you why it took 5 months, and I'm being completely honest to the room. It's because we profit shared with the banks more than they expected. So that. It doesn't come down to I'm a nice person, he likes me, I like her. We profit shared more than they expected. And that's why we signed 78 banks. And then we have an ecosystem where everybody feels fairly rewarded, and then we can provide an experience to the consumer that they need.
So you're trying to say that there are couple goals and there are also individual goals being taken care of. I'm going to go to Danny now. What has been your experience? And if you can take us through, your journey, how you have seen this relationship evolve where do you stand right now? And how do you view this relationship for the next 3 to 5 years going forward?
Yeah, of course. I think obviously coming from the merchant side of things, as Total Processing is, and being a business that was founded in the UK, 7 years ago, we've worked within the frameworks of the regulators within the UK, with the acquiring banks within the UK, and partnership has very much been the forefront of that, and very open partnerships that we see within the UK. Touching on Sam's point then, it's about that revenue share. It's about, one, ensuring that you can deliver the merchants what they want. You provide that agility to the banks. You provide that market readiness in terms of you can move a lot faster as a payment service provider, as a fintech. You can move a lot faster than the legacy banks. We've then seen that success in the UK, and we're growing that now. We're working very closely with the FCA. We're working very closely with the Central Bank of Ireland to advance our licenses to better serve that market. And it's quite interesting for us because at that same period, we've then come to the UAE, and that's in a very different state of mind. It's in a different place in its journey. But what we've then seen is maybe a little bit more closed booked approach from the acquirers, simply because of what the regulators have done in this region. It's only recently that regulators have started to open up to allow businesses like Total Processing to come into the region and become regulated. But I think changing that mindset in terms of what we're here to do, we're here to enable that transformation. We're here to support merchants. We very much sit on that merchant side of the fence in ensuring that we can provide the right products, provide that agility, provide that customer service that I think the acquiring banks here have had such a stronghold over the market share. They've got such a large legacy infrastructure that it relies on individuals within that organization to understand that we're here to enable them. And then it needs that change to ensure that revenue share is fair. I think there's too much negotiations that happens between those partnerships. We find ourselves forever negotiating with the acquiring banks, which just hinders us from actually delivering to the merchant and to the end user. And I think it's interesting, right? Sam talks about open banking and what he's done there. I think us as payment service providers, we're starting to evolve to not just focus on credit card payments and generating our revenue from credit card or debit card payments. It's about bringing in those alternative payment methods, whether it be open banking, peer-to-peer banking, whatever it might be. It doesn't have to sit within that traditional way of generating revenue. It can be spread out across that, and that's also about partnerships, right? Fintechs can work closely together to offer that solution to merchants, and I think our relationships with acquiring banks, specifically in this region, are starting to get a lot better. They're starting to open up to why we're here and what we're trying to do, and it's only good, and I think that helps with what the Central Bank of the UAE have done with the new retail payment services license. It's allowed us to come in with a little bit more comfort that this place is changing from what it was previously.
Interesting. You mentioned about it goes much more beyond the revenue sharing. I'm going to come to Ahmed again. I want to ask, during these partnerships, what are the initial fears you heard from your partners?
Fears. There are definitely a couple of challenges that face the partnership between traditional banks and fintech. Regulatory framework is one of the challenges because the new innovative technologies that are provided by fintech is relatively new to the banking industry. So regulations maybe there would be a risk of regulatory issues in case if there is a lack or an existence of a regulatory framework to adapt to the evolving technologies. And this actually the lack of regulations of regulatory framework may lead to other risk, reputational risk, financial risk. Other, I think, fears, as mentioned by Sam, the legacy or the outdated IT system of the traditional banks. So the compatibility of IT system to adapt to the new advanced technologies is one of the main fears, and that's why maybe there will be a long journey in order to for the partnership to reach its targeted objectives or goals. Cybersecurity is one of the fears with evolving of new technologies. Definitely, there is a risk of cyber attacks and fraud, and we have seen recently a couple of cases, real cases of fraud driven by AI, financial technology. Driven by AI, that a real fraud that has happened. So these are a couple of cases. But in order to overcome, I think, these challenges, both parties has to be open to share their problems and their needs and their success and stories and objectives. So without clarity about the concerns from each party and clarity about the needs, I think this targeted or desired partnership will not succeed. There are a lot of opportunities between fintech and traditional banks, and each party has, as I said, different capabilities. So if we both parties overcame these fears, they can exploit these opportunities. And banks, they are equipped with big volume of data, and with the advanced technologies, these data can efficiently improve the operational performance of banks by utilizing these databases of traditional banks. So the banks, they have access to or they can gain insight on customers' level of income sources, and spending patterns, transaction behavior. So all these together can help to develop or customize the product offering for customers that will enhance customer experience. But in order to achieve that, this has to be cybersecurity has to be mitigated. Get rid of the legacy system of traditional banks. So this, I think, of kind of fears that can be overcome in order to achieve this successful partnership.
Interesting. You spoke about regulatory challenges, and I think I'm going to ask that question later on. But first, I'm going to ask Sam. You spoke about the speed at which your partnerships happened in Japan. How did you build that confidence? What were they telling you? Beyond the products side, what were they telling you on the sidelines?
That's a really good question. So I feel if you started a fintech in 2015, you could do it scrappy. You could get 3-4 people, you could get some coders, engineers, and you could do it scrappy. I don't think you can do that anymore. I think you have to invest in your security, in your infrastructure, in your engineering. I think it takes a lot more investment, time, and your team needs to be well known for those banks to trust you and the regulators to trust you. So I think the bar for fintechs, even starting now, has gone up a lot. And that is going to get rid of people that are not really in the game for the right reasons. And so you have to build the security, the team, and your engineering first and foremost. But then what it leads to is, to your point, the speed. So I'll give you an example. With open API banking, everyone in this room right now, you get macro scored. You get a credit limit because you're kind of like somebody. You get an insurance premium because you're kind of like someone. With open API banking and AI, you're going to get premiums and interest rates and products that you deserve at prices that you deserve. And I would say 90% of people in this room, in legacy banks, you're carrying a lot of people on your shoulders. You're paying a higher price because you have a good income and you've got a good career. You're paying a higher price for products that you shouldn't be. It actually should be the other way around. You should be rewarded for who you are. And the system's the wrong way around. So with AI and open IP banking, you're going to get products specifically for you. And then you can really negotiate and you can really take charge of your finances again. And I see that as a huge plus for the banks and for fintechs, is actually providing that to the consumer, which they haven't had.
Very interesting. What you mentioned, customized underwriting. I'm going to go to Pavel and, ask a difficult question. Is privacy a myth? We are talking about so much technology coming to the picture, obviously to offer better rates, or the use of technology will ensure, obviously, the benefits are passed on to the consumer. However, having said that, there's this big debate going about privacy all the time. Is it really a myth?
No, I think Aman, to be honest, privacy is, I think, the single biggest regulatory issue out there, right? Because this is what really tempers the development of new solutions, and this is, I think, this is the key argument that traditional banks have in talking about the pace of regulatory change. I think at the same time, technology offers us a number of solutions, right? I mean, as we all can see, I think even without compromising privacy, today you have methods and approaches that allow you to gain the benefit of the underlying data without actually disclosing the private details of a particular individual or his transactions or what have you, right? This relates to, things like federated learning, multi-party computations. There are other methods where you can actually extract that value and benefit the whole system, right? And exactly as Sam was referring, just minimize the cost of credit or other products that you're offering to people. So I think this is something that will be dealt with. Again, this goes against the lobby of many of the traditional banks, right? Just in terms of the embrace of this new methods and approaches. But the regulators just need to be courageous enough to experiment with this, where it carries zero or sort of minimal risks to the financial system. I think there are all the benefits of conducting those experiments, and I think the upside is tremendous for a whole economy, because I mean, at the end of the day, building tailor-made products which are hyper-customized, which have all the benefit of the richness of data, of the digital footprint that each of us has, the benefits are absolutely tremendous.
Well said. Danny, you spoke a little bit about, when you came into the UAE, was there a red carpet, or, were there challenges later on when you started integrating? Were there any kind of fears told to you on the sidelines?
Very good question. I think there was certainly not a red carpet as such, because at the time that we entered the market, there was a lot of payment service providers looking into this region, looking to enter into the market. And I think what's important is each one of us has our own niche, and each one of us can offer certain specific, unique and valuable solutions to merchants. And I think the challenge for us wasn't really at merchant level. The merchants, I think for us, was we could get around the table with them, we could talk to them, we could understand a little bit more about their business, and then we can start tailoring our products and our solutions to that specific business. And then there was a huge educational piece to our sales cycles, to our sales pitch. I actually wouldn't call them a sales pitch. It was more that educational piece to understand how we can support businesses transform from a cash-based payment to a digital payment. And then we worked really closely. I think one of the things that we did when we came to this market was that we quickly realized we couldn't just be a sales office and use the support functions of our head office in the UK. We very much had to bring those support functions in first to help that educational piece, to help that transformation of our merchants from how the archaic way of taking payments to a more digital way of taking payments. It meant as a business we had to invest more. We burnt more cash because those roles don't necessarily generate revenue, but it was well worth doing it because we've now set up those foundations to really deliver and excel and look into other markets like Saudi and so on and so forth. The challenges have been making sure that we can stand out and differentiate ourselves from some of the other players that are coming into the market, and make sure that we can kind of work with those acquirers in a way that we can add value to those acquirers in terms of what they're trying to do, and bring new solutions to acquirers that they don't already have. And once we were able to position ourselves correctly in that way, we were able to work a lot closer with the acquirers, and we were able to deliver that solution. But it wasn't quick, and we didn't expect it to be, and we had to change strategy slightly. But we're in a very good place now with the people. Sam touched on it. People are huge in this, right? We are fintechs. We're heavy on tech, but people are such a huge part to what we do, because we're talking to people, we're selling to people. These people run these businesses, and everything that we're trying to do for our merchants is to enhance the experiences of their customers when it comes to making payments.
You made a very valid point. You spoke about financial awareness, and I think in a way it benefits the end consumer. At my previous company, I was working in insurtech and fintech. We spent millions of dollars on financial awareness because that was the key we always felt. And I think that brings me to my next question, actually. Ahmed, who are more difficult to educate, consumers or partners?
It's a tricky question. No, I think it's a learning curve for every player or every stakeholder in the industry. So definitely, customer there is a changing expectation toward financial technologies, and that they are in need to access services in a more convenient way, and consumer now is technical native today, with access to digital channels, mobile apps, smartphones. So they are hungry to access financial solutions timely and with a high or a more responsive customer experience. And on the other side, partners, they definitely are looking or focusing on how to meet the consumer expectation. And there is a lot of room in developing convenient solutions to fit the need of consumers. And as I remember, Economic Forum, they reported around 70% of value created in the economy over the next decade will be based on digitally enabled business model. So the more people gain access to financial technologies, their opportunities to grow is actually increasing. So I think it's a learning journey for all parties, and we see that a lot of room of improvement to exceed the expectation of consumers.
Interesting. Sam, I look at the way we educate consumers. We're trying to decode as much as possible. But when it comes to educating partners, the slides are much more complicated.
So I have a different view. So I think if you have to spend money educating consumers, you might be in trouble. And I haven't seen huge success case studies in the world where a company has educated you. So when I used to work at Facebook, and you look at Facebook or Instagram or WhatsApp, no one trained you and educated you how to use Instagram, WhatsApp, or Facebook. The reason you did it is your friends and family went, hey, by the way, this is great. And this is where that NPS score is so important. Actually, education is probably not as important as someone you trust saying, this is really good. Because when someone says that, you teach yourself. That's the key. You go, okay, I'm going to do it. Now, I'm old enough to know when the iPhone came out, and there was this thing called the BlackBerry and the Palm, and everyone's like, oh, I'm not sure about the iPhone. It's got no buttons, right? And then Apple didn't do an education campaign about no buttons. It was a beautiful UX designed for you that they knew you're going to love. So I always caution any product in the world that needs education. Oh, that makes me a bit worried.
Interesting way to explain your thoughts. Pavel, what about you?
I actually tend to agree with Sam, right? Because at the end of the day, to me, it's not so much about education, it's about the network effects, right? I mean, the game is all about network effects, and at some stage, network effects set in, right? People start caring about their credit scores, people start caring about whether they can or cannot get a new job. I mean, there is this just feeling that sets in as the regulator, the fintech, the banks invest into development of the, say, credit market infrastructure, or the way they bring the lifestyle banking through a very viral product. In my prior job, I used to be the co-CEO of a company called Tinkoff. So, I mean, that's one of the world's largest fintechs. I was at Russia. So at the scale of, we had 25 million customers. So at that scale, we're adding more than 1 million customers every 6 months. And 80% of those customers would still be coming through viral means, right? So, I mean, they would just come in because the product's so good, and their friends and family would tell them it's so good. So, in my view, virality is driven by the quality of your customer experience. And through this customer experience, you actually achieve the market self-education and network effects that kick in both for customers, for the regulators, and for your partners. And I think this is a virtuous cycle that will keep on unwinding, and then there is no stopping it, right? Really, I mean, you asked a question, Aman, before, what's the biggest fear? I think we have all the confidence that we are on the right page in the history books. And the pace of unwinding will just keep on bringing better products and higher quality experience to all the customers out there.
Danny, your thoughts?
Yeah, and I think it's important that we understand a little bit about the different industries we're talking about here, because when I say a lot of what we do is educational, and I'm talking to a business that is used to sending a driver with a post-dated check to cash it into a bank, right? And businesses that are so used to taking cash as payments. I think it's not about educating the consumers; they'll do that themselves, as the guys touched on, right? And it's about educating the benefit of different payment methods to businesses and what you can actually gain from that whole payments ecosystem. Data is a huge advantage that you can start providing to merchants through understanding that whole payments ecosystem, through understanding who those consumers are, what are the trends within the demographic of those consumers, and what alternative payment methods should you offer to a business that allows them to capture those consumers. And I think, we see so many new products coming in now with these new fintechs and different payment methods that consumers will want and they'll start to turn to. And it's about making sure that our businesses and our merchants that we work with are offering those solutions to those merchants, or they'll end up starting to fall behind. And I think we see it now. We everything from soft POS replacing POS terminals, QR code payments in restaurants. But then you go above and beyond that in terms of alternative payments like buy now, pay later. We see open banking now coming in as an alternative payment method on a checkout page, right? What are the benefits of that? There's huge benefits to that. There's certain risk elements that we need to understand in terms of, everyone talks about chargebacks in our space, right? Now, chargebacks are to protect consumers, right? But with the open banking, there's a big play that, okay, there's no chargebacks with open banking, but then we need to ensure that there's protection for those consumers to ensure that if they were to purchase something on a website that had a delayed delivery of goods, that if there was anything to go wrong with that, they can recollect those funds and those payments. So it's about educating merchants on all of these new things that are coming about and what is beneficial to them. They won't all be beneficial to them because their consumers and the demographic of those consumers will be completely different.
Interesting. So what I can summarize is the goal is actually to create a wow experience rather than actually more focused towards education from a top funnel perspective. I'm going to quickly ask, I think we have got not much time left. I'm going to ask maybe last question now and maybe one word answer later on, one more question. And I would ask everyone to, just be quick in the summary. So I think we haven't touched upon the regulatory part. How much regulation is enough? I want to ask Ahmed, maybe, you can give a response. Everyone 30 seconds for your response.
Challenge. Okay. Regulators around the world are now looking at how technologies are applied on the financial services is being developed in order to understand and better assess its impact on consumer and market dynamics as well. I'll just give you and refer to what is happening in Saudi Arabia. It's very impressive actually. There is SAMA, Central Bank of Saudi Arabia. They designed a regulatory sandbox of which financial institutions, startups, they are given facilities to test their digital solution in a very controlled environment. And once if this solution are successful, they are allowed to go to the market. And within this actually sandbox framework, the regulator is close enough to understand and assess the impact of these technologies and adapt the regulatory environment to these technologies.
Great. Sam? Yeah.
3 points. I think I've worked with regulators now for 10 years in this region. One is they compare themselves to each other, so that there is a lot of cross-border learning, and regulators want to be seen as progressive. They don't want to be seen holding back an economy. So that's a good thing. Second of all, I think we learned from China. If you ask the Communist Party in China, would you let WeChat take over your economy like they did? They would tell you no way. And every country in the world realized that they cannot let that ever happen. Now, the Chinese Communist Party has pulled back WeChat and Alipay and Alibaba a lot. And no other government would want that to ever happen again, because it destabilizes your whole financial system. It pretty much made all Chinese banks irrelevant within 4 years. And the regulator can't let that happen because all of our society is built on our banking systems. The third one is that I really like this sandbox approach that you see in Saudi and you're seeing in Oman and in other countries around the world, because you have to prove yourself. And even in technology, when we launch a product, we sandbox it. We don't let 4 million consumers try it at once. You let 10,000 and you let 30,000, 40,000. That's the same what regulators are doing, and I really like that. So that's my 3 points.
And that is very much happening in India as well, by the way. Pavel?
No, it's a great question to be asking, but I'll actually try to counter, I think, what Sam and Ahmed are saying a bit, right? I think, to me, the central part of what the regulators need to be doing is they need to be beefing up their data processing, data analysis, cryptography, etc. capabilities, right? They really need to understand the tech, right? And lots of the stuff is really cutting edge R&D, etc. But the financial service regulators need to be completely up to speed. And unfortunately, that's not the case in many countries, right? And unfortunately, lots of the stuff is still being misunderstood or not understood fully. So I think if that understanding is in place, then we can actually talk about how the change needs to be implemented. I'm not a big fan of sandboxes. I'll be frank. I mean, I agree with you that there needs to be experimentation and you need to prove yourself. But at the end of the day, I mean, we're not children to play in the sandbox, right? At the end of the day, I mean, we are rebuilding customer experience. We're rebuilding this as licensed banks, licensed financial institutions long term. Right, and as such, I mean, let us compete. Let us sort of prove that we can deliver through better focus on data, through better focus on customer experience, through much more horizontal and flat and meritocracy-driven corporate structure and culture. We can deliver a better result to the customers, right? And for that, I mean, we're happy to go beyond the sandbox and actually prove it in an actual marketplace. I think as we kind of look forward, what's I think an important quality that every regulator needs to put in place is what I call the systemic regulation of the financial service industry. Let's not make it company specific. Let's not make it category specific. Let's not make it product specific. Let's not make this a manual regulation of very specific details what needs to be done, right? Rather open up the market and be very systemic and ruthless in just in making sure that there are the same rules. It's a fair play for everyone, and we can actually compete on a merit basis. I think that's what's most important, but with a proper understanding of the technology.
Danny?
I'll keep it quick because I can see that the time's up. I agree with kind of what everyone's saying, and I think people are innovating very, very quickly, right? And regulators need to keep pace, but in a way that they're actually understanding what people are doing, rather than just putting things in place that might halt that innovation. I'll use a good example though. If you look at what the UAE have done in terms of kind of opening up to the crypto world, and then you see the big players enter into this market, and then how quickly they were able to spin up VARA as a regulatory body was extremely impressive. And I've worked and spoke to a lot of these guys in that industry, and they've spoke very, very highly of that. So there's good and there's bad, but regulation's good, and if it's done correctly and it's done to the speed of what people are innovating, and I think that's probably the most important thing.
Awesome. One last question, one word answers. Basically, if you have to describe in one word, what is that common goal that brings fintechs and banks together?
Fitting customer needs, I think.
Customer needs. How about you, Sam?
User experience.
User experience. Pavel?
I would be also customer-centric, yes.
Danny?
I would tend to agree, yeah, because consumers' kind of experiences and making sure that we stay at the front of it.
So basically customer experience and delight in a way. Great. Thank you so very much. It was lovely talking to all of you. I think some great insights. I hope I moderated it well. Thank you, everyone.